Maybe you can throw your 2 cents in and tell us what you think the Fed should do.
I tell the Fed in private what I think they ought to do, and that's the last I hear of it.
What about this notion of the economy weakening, potentially recession risks picking up? Alan, how do you see the U.S. outlook for the rest of the year?
Strangely enough, it's going to depend in large part on the stock market, because we underestimate the wealth effect on the economy, and in this type of volatile stock market moves, it has an impact which I don't think we fully understand nor measure correctly. Overall, the economy seems to be sagging. Longer term, of course, I've made the point that with the entitlement surge as we age in the population, we're draining gross domestic savings from the economy dollar for dollar, the data show. And that implies that it's undercutting capital investment from which is heavily financed by domestic savings. The problem at this stage is that it's not clear where the markets are going, but let's not rule out the fact that they are in and of themselves a critical fact. Econometric analysis says effectively that a 10% rise in the S&P 500 has a 1% effect on overall GDP. That is not a small number.
No, it's not. What about the trade war and the tariffs and the fact that we're starting to see it more prominently feature in ISM weakness and manufacturing weakness in this country? How much do you think that is slowing the global economy, and how much do you think it's a headwind for the U.S.?
Well, I think it's, first of all, it's a major global issue. I don't think this thing is caving in, so to speak, but that it's eroding and it's weak, I think, is unquestionable. I think it's important to recognize that if we get major stock market adjustments, we're going to feel it in the economy with a very short lag.
So, I mean, do you think the prospect of, I mean, I saw a headline that you were talking about the idea of negative interest rates potentially happening in this country. Do you think that's something possible? And if so, what would it signify?
Well, first of all, what it signifies really is that the world population is aging, and that people are recognizing that they're dying off at a much later date than they originally contemplated when they started to save. And as a result of that, there's been an endeavor to pick up fairly quickly. Like the U.S. Treasury 30-year yield is terrifically useful, I would say, offset to the other things that are going on in the market. It's a real-time asset. And the reason, one of the reasons the gold price is rising as fast as it is, you know, at $1,500 a troy ounce, that's telling us essentially that people are looking for hard, basically resources which they know are going to have a value 20 years from now or 30 years from now as they age, and they want to make sure that they have the resources to keep themselves in place. That is a clearly fundamental force that's driving this, but we don't know how far it'll go.